Hey, what's up, everybody? All right, guys. Hopefully, everybody had a great weekend and a great week overall in the markets. And today, we're just going to look at a few things here and just kind of look at some levels. All right, I'm going to keep it very simple today. No need to explain to you guys that this market is a little bit volatile and it's been a little bit crazy when it comes to the recession and the inflation and the rate hikes. And I don't know what else, right? Just a ton of negative catalysts just that is going back and forth, and it's literally just nonstop, right? So what do we do in this case, and what do we look for, right? I've been keeping it very light lately the past few trading days and weeks since we've had this doji, and like we talked about last time, this nice head and shoulders, and once this thing broke, that doji came down, the pattern formed out, and no demand has played out. I mean, it's just been a little chaotic to take some real good swing trades and things like that. But overall, the percentages are pretty high and the premiums are pretty high due to the volatility of being bearish in the market. So it's a good thing for all option traders, which is cool. I mean, of course, if you're catching the trades, if you're not, then you're probably struggling like everybody else is, right? Either way, we still need to find some structure in this market, and we find ways to capture the best that we can, right? Whether we go up or down, we want to do the best we can to capture some of these trades. So again, we're going to talk about this main staircase pattern that we have ever since we had that drop from COVID. We literally just started booming right back up, right? And so that's the conversation that everybody's having nowadays. In every server out there, every platform out there that's being talked about the market is the fact that we did drop from COVID, and we never found structure here. Okay, and this market has just been going up ever since, and it's just been nonstop buying and buying and buying. And for once, we finally experience a bear trend, and some of us can't accept it yet. The truth of the matter is that the opportunity is still there for long-term plays, and a lot of great opportunity to start building portfolios and things like that. And I myself am for one building portfolios now, because I'm not looking at the shorter time frame. I'm looking at the bigger time frame in the market where something may just continue to recover in the next like 5 to 10 years, right? I'm not here to get into a stock and freak out because it drops like $5. I'm here for the long game. Okay. Either way, let's look at this here, these nice pieces here, because we need to come down, right? Yeah, that's what everybody's saying. Where is something going to break? Well, after having a nice structured staircase pattern, this is usually how it likes to play out. Here's your rally. This is the base right here that we had. Sorry, nothing. And then here we had another little base, as you guys can see. And then right here, we just kept on going back up. The thing about a staircase pattern is this is what it looks like, okay? We go up, go sideways, go up, go sideways, go up, and then go sideways again. Unfortunately, we did not hold up here, and it created a downtrend staircase now, right? So this is called public participation. The accumulation phase is created when we have these bases, okay? That's what this is all about. That's how you will know when something becomes supply or demand. It's demand as long as it breaks above. It's supply as long as it comes back down. As you can see, that doji hit perfect, rejected that, and came right back down and blew through this demand. Well, you guys may ask, well, why did it break through that demand? Well, that demand was not strong enough. What's happening here is that because of the staircase pattern being so weak and not much structure to it, that's what creates a straight flush and a breakdown through those demand levels. So the longer the range, the better it is for something to actually hold. Otherwise, it's not going to be as strong. Therefore, when you look for these trends to the downside, you literally can use all these points here as targets. Okay, targets to the downside until you reach that bottom of demand, which will be right here. As crazy as that sounds, and as crazy as it looks, we do have potential to drop into that level. Again, I wish that we don't do that, but if we do, we're just going to have to accept the fact that we're going to just keep on turning down all the way into the year. But in order for something like that to happen, we do need a retest. We do need some green candles. We do need a base. We do need some patterns in between. Otherwise, if this thing keeps trending and we have another red week, it's going to almost look just as bad as we had in COVID and in the past. I know there's been, I think this is one of the worst weeks the S&P 500 has had in quite a while, compared to this COVID, of course, before COVID. So we do need some structure. We do need bases. We do need patterns. We need stocks to cool off. We need all those good things, right? As much as it sounds that I'm bringing in some type of hope into the market, I'm not. All I'm doing is giving you the reality of something that we need to happen. We need to see it happen, basically, okay? So what I don't want to see is, I don't want to see another red candle do that, okay? I don't want it to break any further down, creating a lot more volatility, and I don't want this volume to continue to rise, okay? But at the same time, I know that the market is being looked at by so many technical analysis traders out there, meaning that they like the indicators and the RSIs. So this market is oversold on so many levels that there's potential that we may have the next 2 to 3 weeks a nice slowdown in the market, but who knows, right? All we can do is identify where something may change price action in order for us to take some good trades, right? So I'm going to give you these levels right here for the little bases that we have here. And that's all I really can do for you. Other than that, I'm going to look at a few other things and just going to give you proper levels, because in reality, I take it day by day in the past few weeks, because it's difficult to, tell you guys that something is going to go green, because it may go green for like an hour or two. Next thing you know, it just gets slapped back down. And the levels are, you can still use them for upside and downside. But either way, it's a little too chaotic, okay? So either way, let's look at this level right here. You want that 39.50 to hold, okay? That level. You want the buyers to come in, these wicks down here. We created a little base here. So that's your 37.45, or you can just round it off to 37.50. It's not a big deal right there. Okay, your bottom piece would be 36.80. Okay, I'm just rounding off the numbers, guys. Don't get too technical on me. But below this, guys, this is the next level that we're going to head into, that 35.12. And then we have this piece down here at 32, is this 33? Yeah, 32.80, 32.50 to 33. This would probably be the bottom of the markets if we do continue down. I mean, I don't know when the bottom is going to be, guys, right? All I can do is find these levels and go with the flow, right? So that's based on the weekly. Here on the, well, let me show you the daily. Another thing, guys, is when we're in a bear market, most patterns play to the downside, okay? Last week, I did talk about a few candlesticks that had hammers and dojis. Every ticker that I posted literally ran up just a bit and got smacked right back down, okay? So I know everybody's going to be looking at ES Doji right here. This is a Doji candle for those who don't know. We're at the bottom of a level where there's some buying. I wouldn't say strong demand because we're below 39.50, but we are at the bottom of a channel. All right, so we're at the bottom of a trend and we have a doji. Usually these dojis signify reversals, potential reversals in this case. But like I said, last week just kind of proved that all those bullish patterns did not play out to the bullish side. They played out temporarily, but nothing held. So there was no follow through on the bullish side of these candle bodies, these candlesticks on these time frames, not even the weekly, okay? So keep that in mind. All right, don't come on here and just be like, oh, there's a doji, we're gonna reverse. No, don't do that, because even though the potential may be there, if the market sentiment is not in your favor, then there's no way that we're gonna see a bullish reversal anytime soon, because again, everything is still being volatile, and we still have war, inflation, rate hikes, and supply chain issues from China. So basically, it's a whole economic meltdown that we're having and experiencing. So don't go 100% bullish just yet, okay? Be cautiously bullish. If you guys see green candles, make sure you guys take profits. If you guys are in puts, just make sure you ride that trend, because there's been a lot more selling than buying lately. And gosh, I'm seriously almost tired of dealing with these bears. But congratulations to all those bears. But anyways, let's look at some levels here. So I gave you guys a 39.50. So what I've been doing lately is I've been looking at psychological numbers, and they all been working out pretty fine. So the reason for that is because of the volatility in the market, is that the psychology behind it is everyone starts thinking whole numbers. When somebody starts thinking whole numbers, you start thinking, well, shoot, we're over that 4K. We're going to go hit that 40.50. We're going to hit that 41. We're going to hit that 41.50. But as you can see, every level has been respected here on this specific ticker. So 41.50. Here's your 41. Right? There's your 41 right here. Okay. Just being respected. Here's another one, 40.50. All right. So another one right here, 39 right here. So all the psychological levels are being respected in some way, shape, or form. Even in the tickers, you'll notice the same thing. So just a little quick tip for you guys, if you guys are paying attention, by all means, make sure you guys are looking at psychological whole numbers, okay? So keep that in mind. But yeah, that's ES. That would be the same thing for ES and Q. The other one I want to point out to you guys, very, very important, is this RTY. Okay, we are literally right here, close to that piece. We did touch it, by the way. This was your pre-COVID high. Right here, that 17. We finally touched it right here. Can this be a potential bottom for RTY? Who knows? If you guys find that the 17 level right here holds, look for a base, look for some patterns, look for some dojis, look for some bullish momentum. I mean, look for some amazing bullish setups across the board on RTY, okay? Anything under the Russell, please look for some major buying or major oversold levels. I mean, look for your golden crosses for those technical analysis traders out there. Look for the divergence. I mean, look for all that stuff, because this is very, very important right here. The fact that we came and test this specific level again means something, all right? So what is price action? Price action is something that's happened in the past, will most likely happen in the future. So something that happened in the past, right here, we blasted up, we came to retest. What happened here is we got rejected and basically crashed down. So here, one or two things is going to happen. We're either going to blast back up, or we're just going to keep on continuing breaking down to the bottom. And the bottom here would be like around 1460. Yeah, about 1460 right here, 1450. So it's a pretty big drop if that were to happen. So that 17 all the way to 1450, or that 17 hold and back up into that 2K level. So it's going to be a big deal to start looking at RTY in the next few weeks, because ES and NQ are not at those levels just yet, but they do have room to drop that much further. So consider that, okay? NQ, I would say if you want to look for a bottom, would be this right here, this 11. That 11 and this 120.70 right there. Yeah, 120.50. 120.50 and then this 11. This is the base that I will look for the market to just hold for NQ. Right there. That's what I would want to see. If this thing can just hold above that 12, then we should be okay for the bullish side. If it can't hold above that 12, I'd be looking for this downside of 11. All right. Very simple, guys. As for gold, if this candle here holds and we trade sideways, I think gold is going to be a great dip buy here on this 18 to 1850. It's a good opportunity to dip buy. Okay, so just this little piece here, it's a great opportunity to dip buy on gold. So if market gets a little more volatile and crazy, look for gold to continue to push up, because all this is a nice retest of this previous base. Let me show you guys. Here you go. There you go. Okay. So all this consolidation basically getting tested here. We came down, got built some demand here. Demand got bought up, and now we're breaking above, closed right above and inside that zone. So if this continues staying above that 1850, we can go to 19, 1950 and back all the way into 2K. So you can look for look for the market to basically crash on down, because that's what everybody is saying. look for more volatility, but also look for gold to be a safer asset for the market. So look for potential longs on GLD, okay? Or look into JNUG. I believe it's JNUG. Yes. So with that, let's look at oil. Oil's been trending very nice, guys. We did talk about this specific pattern here that we had last week. This thing was just holding very nice. I forgot how that thing was charted, but anyways, lots of buyers still showing up. So honestly, this is very, very easy. So if we can stay above that 110.50 right there, go long. Below it, go short. Very simple. Okay. For this one, you can trade USO. USO has all the good contracts for it. So okay, Vixx again. If you guys see the market being volatile, just come check out the Vixx, guys. If it's dropping even lower, make sure you look at this Vixx to go green. If the market is going green, look for the Vixx to go red. Okay, so we're looking for a change of price action here. We're looking for a change of characteristics. We're looking for the fear to slow down if we're looking for a bullish market, but we're also looking for this to continue breaking on up if the market continues to crash on down. You don't need to look at it every single day. Just set some random alerts on the break above the candles or the candle bodies, just so you can be aware, not and alerts, not charting in any way, shape, or form, because you can't chart fear. So make sure you guys just set some random alerts. All right. As for the bonds, I think these things are pulling back just a bit. I hope this thing drops just a little bit more for the 10-year. This is not an all-time high. This is an all-time high from like a few years, which is like 5 years. And this thing has been a lot higher, but it's kind of irrelevant right now. As long as we don't keep continuing up on bonds, 10-year, we should be okay for tech. But again, I'm just kind of looking for things to start changing and start adjusting in the market if that were to even happen, just because a lot of the oversold signs, the fact that we hit a bearish market, we hit 20% on ES finally. So from that drop down here, we hit 20%, but we closed at 19%, leaving us still in a bearish market. So the actual fear may be here in the market. And what I like about this is that when everybody's 100% bearish now, it may just turn bullish, to be honest. But again, I'm not biased. I'm just waiting for the levels to break above or break below. So let's just keep that very simple, right? Jets, airlines still struggling, so no specific pattern. I'm just looking for the break of 22 on Jets. You guys can see that we're way down here, so everything's been breaking down like crazy. XLF is another one that may fall. This thing doesn't really have any strong demand until that test of pre-COVID, which is right here, that 31, that 31.20, and even potentially that 30, okay? So this is the level that I have target for financials. So look for all financials to drop just a bit more if we don't go bullish, but expect another drop on financials. XLE, we did close with a nice doji on top here. So I think this one's going to be a lot easier. So if you guys want to take a position shorts on XLE, which is energy, I would say on that 80 or anything below this candle, that 81, 81.80, start thinking bearish. Okay. If we continue to hold above, then look for that retest of 85. But just start being a little more cautious now, just because we're creating smaller candle bodies up here. We do have a lot of buying pressure just due to this nice green candle and this nice buying wick right here. But then we have a doji. So the momentum might slow down here. So look for that 80. That 80 level is going to be your psychological, where it's either just going to keep dropping back down or hold above that 80. So keeping it very, very simple here, just because we're on the top of a supply here. And let's see what happens to XLE. I'm really looking forward to short something like this if we do come down. Retail, man, retail just got smoked. We did break trend here, so look for a nice green candle, and then the retest, basically what I'm saying, and then the continuation to the downside. Walmart, Costco, KO, Pepsi, all those are getting hit because of supply chain issues. So there may be continuation for all retail. So if you guys missed a lot of the downside movements, I think XLP can be the next one for you guys, which is Walmart, Costco, Target, KO, you know, anything that has to do with retail supply chains and food and stuff. So start looking for that, right? The one ticker that got my attention, sector, was TAN Solar. This thing actually had a nice green candle this week. So stay alert over anything over 70. I think we should consider going long. For now, I think I'm gonna let it chill, let it develop a pattern formation or something like that. Anything that can just tell me to go long. For now, if you guys want to take it long, go over 70, or if you guys want to just take it over that high 68 to that 70. But I have my alerts here a little over 70, so I'm gonna keep track of this. It got my attention because it had a green candle on the weekly time frame with a red market, which is not normal. Good, but strength, basically telling you guys that there's strength. Okay, so yeah, just look for that. ARK is the other one, guys, that's just been getting smacked lately because of Tesla and just because of all of its holdings. If you guys don't know Kathy Woods, she is the owner of ARK, and her holdings are down pretty bad. Okay, so I'm still going to keep this entry 45, target 52. I want to see ARK have a green candle, and the reason for that is because it did not drop any further this week, even though Tesla dropped tremendously. ARK in itself did not. Okay, so this is perfect. Okay, this is what I like to look for. I like to look for these spaces that get created. Once you have these spaces, they become accumulation phases where you have potential of a future reversal, potential reversal that may happen, short-term reversal, whatever you guys want to call it. But I'm looking for some green candles on ARK. So if this thing can just break 44, 44.50, 45, I would just say long, target 52, honestly, and look for green candles on things like ZM, Roku, TDOC, SQ, even Tesla. Look for some green momentum on some of those tickers. There's a lot of great tickers out there, guys, but I want to point out some things that just make a little more sense, right? So now with all those ETFs broken down and the futures broken down for you guys all know the drill. You guys have so much opportunity in this market, guys, that you guys can day trade and scalp and swing trade as much as you guys want, tons of stuff. But I want to show you guys 3 specific tickers that caught my attention this week. TWLO is one of the best ones that I've seen so far. If we have a green Monday, I think this can pop real nice. So nice little trend line here. Okay, it reaches all the way to this bottom. Okay, with a nice little base created as well. So this little base, let me just show you guys so you guys can visually see it, all this right here. So the bottom is 96, the top right here is about 105, 106. So entry is 106, target 110.50, 113, as high as this 120. TWLO can be a nice reversal if we have a green market, okay? The next one is gonna be SPOT. As you guys can see, nice little squeeze here. So I really hope this doesn't gap up on Monday. I hope the futures kind of go flat or whatever, wherever we may open, who cares? This is not going to change my entries, but 108, I am long all the way to this 112, as high as this 116, okay? 112.50, break 108. So below, if this thing drops, collapses, and the market starts trashing and rocking and rolling to the downside, then the break of 103, and this thing would rocket all the way down to this 89 or 90, sorry. So either way, I'm looking for the bullish momentum on TWLO and SPOT, but I'm ready for both sides. All right. The next one is going to be SBUX. I'm actually in a swing trade already. It's a slow mover, guys. So if you guys get in SBUX, look for some red candles. All right. If the next day it doesn't go green, just cut it. The theta is not going to kill you bad, but the movement is what's going to kill you and test your patience. I'm looking for the break above just that high. If we continue, I just want to see that 75 retest and a high of like, what is it, 76, 75, 60 around there. That's all I'm really looking for. I'm looking for SBUX like a couple green days. I started buying shares. I actually got filled here at the bottom on this day, and then it ran all the way to 75. So that was pretty amazing. So I've been green ever since on SBUX, and I'm still green. So it's kind of nice when you can say that you actually bought the bottom. This is where I bought SBUX down here. Also the CEO is also buying a lot of shares back for SBUX, which is a good sign, meaning that somebody still has hope. But yeah, I mean, there's only 3 tickers that I have, guys. The other one is going to be Amazon. Watch out for the upcoming news. They do have some agreements on the stock split. So this thing is either going to move or it's going to move. Okay, it's going to move up or down, basically. All right, so if you guys want some solid numbers, like I said, 22, and then this bottom, I use 21. This right here would be your indication of going up or down. Okay, target to the downside, just let it roll. Target to the upside, you got this top of 23, but look for whole numbers, guys. All right, 22, 2250, 23, 2350, 24. I mean, I really hope this thing runs, because if it does, I'm gonna be in it. Just depending on the market sentiment. So look out for Amazon, right? There's a lot of stocks that are still trending down, guys. Google broke a major demand here, so there's really no support all the way until, let me show you the weekly, not the daily. It gave up this demand right here. Okay. All right, so it gave up that 22, and then you have more demand down here, which is your 21 or 2090, and then you have this bottom at 2K. So there's potential with the red market this week that Google may hit 2K. So I've been shorting Google the past week or so. So I caught one of those pieces, which pretty amazing. But this one, unfortunately, I missed it. But I did scalp it. Either way, I still say that I missed it. But look for more downside for Google with a bearish market. Otherwise, above that 22, I would consider going long. Otherwise, short the crap out of Google. And then also Apple just started a downtrend. So it's a lot of stuff going on, guys. I can't come and break down every single ticker. I know a lot of people out there are going to be trading and doing streams and stuff like that. But all I can tell you guys is be patient, respect the trends. Don't get biased on anything. Just because the world is falling apart doesn't mean that you have to get biased and agree to it. Okay. And just because something is reversing doesn't mean you have to get biased and say that you called the bottom. So be aware things change real fast. They change instantly. They change by the minutes, by the hour, by the day. Things change overnight. And just be careful. That's all I can tell you is respect the levels, respect the trends, get in, get out, start building portfolios, guys, is probably one of the best things I can suggest for you guys. Okay, not financial advice, but definitely suggest or give you an idea that it's a great time to start building a portfolio, guys, if you don't have one. But anyways, I hope that kind of breaks it down for you guys. Be aware, guys, that the levels, any bullish setup is just getting torn down. And yeah, accept the volatility is all I can say. It's been rough. So hang in there, guys. If you guys are struggling, hang in there. If you guys are still profiting off this market, congrats. I know it's been tough. I know it's been tough for me too. I've taken quite a few losses as well, but also some real good winners. So look at the upside. Don't look at the downside. Don't let yourself get beat down just because of your past mistakes. Look at it as a great lesson learned and continue moving forward. But yeah, hit me up if you guys need any help. I am more than welcome and happy to help you guys on a one-on-one basis. Otherwise, come check us out at Conservative Collectors, or just come check us out on the Instagram, guys. All right. So hope to see you guys this week, and good luck, guys. Please keep TWLO and spot on your radar for tomorrow. And man, have some fun in the market, guys. All right. Y'all stay green. See you on the next one.